everyone. Welcome to yet another weekly analysis. For this week, we're going to be focusing on GBP USD, but the dollar index is, a roadmap for us to be able to decipher where the market is headed. You know, 9 times out of 10, or most times rather, right? I've been able to execute in the market just based off of the DXY. And it's very important because the DXY it is the dollar index, right? It is the United States dollar, right? In technicals, it's what I'm saying to you in technicals, right? In candlesticks, this is what the United States dollar looks like, or this is what's happening right now in the states when it comes to technicals and candlesticks and whatnot, right? So it's imperative that you follow the DXY. Do not use the GPUSD to trade the DXY, but rather use the DXY as a roadmap or as a GPS to profitability with the dollar. So if you're looking to trade the dollar, if you're looking to trade the yen, an economy is basically like a trend. Right now, the United States is the strongest economy in the world. So I would advise that you pick a trend. If you're going to trade, a trend, you want to trade the US. If you want to trade a trend, you want to trade the yen. You want to trade the euro. You see what I'm saying to you? Like, these are different economies, right? So it is imperative and it's important that you pick a trend, ride an economy. So, for example, we're riding the dollar. The dollar is the strongest in the world. Everything is based off the dollar. The oil, gold, silver, commodities, bonds, even debts based off the dollar, right? So it is very important that the dollar is being traded by traders as it is the strongest in the world right now. So what's happening in the dollar? Let's first of all go to the monthly time frame because it's very important. The monthly time frame is the overall structure of the market. I say this again. The monthly time frame, the monthly. If you are looking to trade, like the hedge funds, you want to go to the monthly, the 3 month, the yearly. But we are retail traders, so the monthly time frame is detailed enough. So on the monthly time frame, we come on here to look for the overall structure of the market. Where is the market headed? Is it bearish or is it bullish? Is it north or is it south? In this case, we've been able to decipher that the market is bullish, not just because of where it is at right now, according to my lines and whatnot, but because it is bullish structurally. This is what I'm trying to say, right? This is price action, literally higher highs and higher lows, higher highs and higher lows, higher highs and higher lows. They tell us that we are bullish, right? Higher highs and higher lows tells us that we are bullish. So if we are indeed bullish, we should be looking to buy at certain areas of interest like so, like so and whatnot, right? So, but what I'm trying to say is this, right? Price action should tell you where the market is headed, not support and resistance lines, not indicators, not RSIs, MAs or whatnot, moving averages. No, price action, simple. I can show you a naked chart and I will see just one thing: price action. So price action tells us this. It's a simple rule: higher highs, higher lows, higher highs, higher lows, higher highs. Until we break this low right here, we are indeed what? Bullish. And then we'll come for a retest to the left shoulder, the usual, right? And then we short to the downside, right? But that hasn't happened yet. Simply because, price hasn't what? Broken this structure right here. And we can also see with our, trend line coming from the bottom, right? You can see that we've been holding and we've been respecting what price action. Excuse me. So I'm saying we've been was respecting price action. Now this is the third touch. Now I need you to understand one thing, right? Chart patterns are very, very, very important. When I say chart patterns are very important, I mean double tops, double bottoms, right? Head and shoulders. These are very important things in the market. You need these things. You need to be able to navigate the market or the charts with price action. Now, with your sorry chart patterns, right? Now, when you see chart patterns on the monthly time frame, on the weekly time frame, on the daily time frame also, right? It is very, very important that you pay attention to it. Very important. I've learned this the hard way. Very important. You must pay attention to what chart patterns, especially on the higher time frames. Now, you can see that this is the third touch. 1, 2, 3. The third touch does the trick, right? But I need you to understand something. You might have heard this. They say history repeats itself, right? if you notice on this trend line, like so, there was a double bottom, and then double bottom indicates a reversal, and then we had this huge push to the upside. Now on the same trend line again, we've had a double bottom as well. We've had a double bottom as well. If you can strain your eyes, you will notice that this is one low, this is another leg right here, and this is the neckline like so. And then let me draw it out like so. This is one low, this is the neckline, and this right here is your other low, and then a push to the upside. Price action. All I'm going off of is what has happened in the market or what I've seen before. This is the exact carbon copy of. You see what I'm saying to you? So we can anticipate that the next move in the market should be to the north. It should be north, right? We should be looking for buys with the dollar. Now, after you've been able to decipher where the market is headed, where the dollar is headed, is it strong, is it weak, right? You then go to the other. I then rather go to GBP USD or UUSD to trade the dollar as a proxy, right? So because I cannot trade the DXY on my brokerage, so but this is how I would be doing it, even though I had the opportunity to trade on my brokerage, right? But most importantly, let's focus on where the market is headed, right? Now, the first thing is this, right? We come in and we say, all right, where is the market headed? It's headed north. We are bullish. I take that somewhere. When I put that in my pocket, I write down on my journal, all right, the DXY is bullish, the dollar is bullish. Now, you need to understand that when the dollar is bullish, the Euro USD, the GBP USD, they move, inversely to the DXY. The DXY is basically the Euro USD turned upside down, right? So I am able to anticipate or rather decipher that the dollar is bullish. Now, on the monthly time frame, that is all I need to do. That's all I need to do. Know the direction. I then go to the weekly time frame to look for chart patterns. Look for pullbacks. What's happening right now, right? I don't do much on the weekly time frame, but to plot my areas of interest. But it is also imperative that I come onto the weekly time frame and see how the weekly candle has ended. What does it look like? Is it a reversal candle? Is it a hanging man? These things are. Is it a bearish engulfing? These things are important. So if you look left, right, this is my area of interest, right? This is where I'm looking to buy the DXY to the upside, right? But there's something that needs to happen that hasn't happened yet. And that to see that, we have to go to the daily time frame. There's something that needs to happen on the DXY that hasn't happened yet. The dollar needs to find its way here. Whenever you have a break and whenever you have a break of major levels, like so, you see these black thick lines, these black thick lines, these are major levels from the monthly time frame. So we're basically getting out of a monthly time frame range into a new monthly time frame range to the upside, right? So whenever that happens, you want to wait for a daily time frame, not a 4-hour time frame. You need to wait for the higher time frame to retest the area of interest. So the DXY has to come in here before we then look for buys to the upside. Now, there is a trade that is cooking here, that's brewing. So a trade is coming from the GBP USD, and I'll show you in a minute. But this is my thought process to the sales, to the buys I'm going to take on GBP USD, because you need to understand why I'm doing what I'm doing, right? Now I'm anticipating rather the DXY to do this and then do this. You see what I'm saying to you? This is my anticipation for the DXY. Now, this pullback, like so, if I go on the GBP USD, because this is the pair we're trading, right? GBP USD is our focus pair. Now, I need to start from the monthly time frame again. I'm going to say something that's similar to what I've said on GBP on the DXY. I said it before, price action is what we trade. We don't trade support and resistance lines. No, 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 no. We come onto the monthly time frame to look for what? Price action. What's the market saying? Where is it headed? What's market structure saying? Market structure tells us higher highs and higher lows, higher highs and higher lows, shows us the bullish market until we break the last low. Then we are then bearish and then we set to the downside. Yes, this is the exact same thing I said before on the depth, and I'm saying it again right here. Now, there's something you need to understand, right? When the DXY is going up, right, the Euro USD GPS will be going down. They move inversely, they're inversely proportional. Now, I use the DXY as as a proxy, sorry, not proxy, as a GPS, right? As a map, as a guidance to my executions. Now, on the monthly time frame on the GBP we are bullish. Why are we bullish? Because we've broken this structure right here, and then we are creating higher lows around here. It is very important to know this. Now I know, all right, we're bullish on the GBP, right? So the fact that we are having a pullback on the DXY, right, gives me a stronger reason for this buy. It's very important. Now GBP this is my trade for the week, right? I'm anticipating GBP to come into this level like so, and then a buy to the upside because we are bullish on GBP. I don't trade a ranging market. No, 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 no. I trade trending markets. Now, how do I pick a trending market? A trending market is a market that is trending in the direction of the monthly time frame structure. So if the monthly time frame structure is bullish, high highs and high lows, I should go to the weekly time frame and the daily time frame to trade in that direction. That is how I pick my best pairs. I don't pick random pairs. I don't trade what I don't trade off of, oh, it looks good. No, 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 no. I trade off of market structure. This is how I pick my best pairs. This is how I'm able to. This is how last quarter, right? Last quarter of last year, I was able to, have a winning streak for like for the whole quarter. I was able to have a winning streak for the whole quarter, and I will paste it on here. The winning streak for the whole quarter. So I was able to pick the best pairs, and I was able to trade in the direction of the monthly time frame. That is how you pick the best pairs. Trust me when I tell you this. I'm not I'm not reiterating what my mentor might have said. I am telling you from experience. I had to take losses to learn what I'm telling you. You know what I'm saying to you? So on the GBP we are bullish on the monthly time frame. We are bullish on the weekly time frame, or rather, sorry, let me see. We are bearish on the weekly time frame because we trade market structure. We are rather so sorry, higher highs, higher lows, higher highs, lower lows, lower highs. So we are bearish on the monthly time frame, on the weekly time frame rather. But my job as a trader is to anticipate. You know what I'm saying to you? My job as a trader is to anticipate, or you call it predict. Anticipate what's going to happen. So if you look now to the left hand side on the weekly time frame, even though we are bearish, right? Every time we came into this price 1.31500, this is a round psychological. It's perfect. Every time we came in here, we had a bullish engulfing. We had a bounce, a bullish engulfing. We had a bounce, a bullish engulfing. We had the bounce again and a bullish engulfing. Now, I said this before, a couple minutes ago. I said, pay attention to chart patterns. Candlestick patterns and chart patterns, they are two different things, right? Now, this is a candlestick pattern. You see this formation right here, this free candle formation you can see right here. This is what they call a morning star candlestick formation. This is the morning star. When you see things like this, just know it is about to go down. When I mean it's about to go down, I mean it's about to happen, right? Something is about to happen. In this case, we're about to rally to the upside. GPSD, there's nothing on earth that tells me that GPSD would drop to the downside. Nothing. Everything I see on GPSD right now points to the upside. Upside, upside, upside. Now, it's not just enough for me at least to just say, oh, GPS is bullish. I go to the DXY. I say, all right, why should the GBP be bullish? Why should it go up? Now, this is my reasoning behind my trade for the week. Right now, I'm going to show you. I'm anticipating that GBP pulls back into this level right here, and I love the fact that we are having uh, a pin bar, right? When you see candles like this, small body candles like so, right? It anticipates a reversal. And that's it. It anticipates what a reversal, and then normally you then expect a bearish engulfing, and then you see what I'm saying to you. These are the things. These are candlestick patterns, or rather these are chart patterns. Excuse me. You see what I'm saying to you. So, and I'll tell you this for a fact, right? The market will always tell you before it reverses. Never in the charts will it just happen. Oh, boom! You just see a Marubozu candle like so. It just happened. No, 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 no. It tells you how. If you notice, we touched the area of interest. We had a small body candle. We had the small body candle before the drop. So for like 4 hours, but right now they were in the daily time frame. So for like 2 days, it spent 2 days to tell us I'm about to go down. It spent 2 days to tell us something's about to happen. So this is my thought process for the entry, right? Now for my entry, I need to go on the 4 hour time frame, right? Now you can see somewhat of a double top forming on the 4 hour time frame, which also anticipates a reversal. So All we have to do is wait for the market to do this, come into the area of interest, and then we buy to the upside. That's what I'm saying to you. This is all we have to do. This is all we have to do. This is my thought process for GBP, nothing more. That's what I'm saying to you. Now, this pull back to the this drop to the downside, right? On the DXY, if you notice, it would be a push to the upside into its own area of interest. And then this pullback that we are anticipating on the DXY, right, would then be a push for the GBP USD to then rally to the upside. So you can see, like, the DXY, it complements our entry. So if the DXY, when the DXY does this, right, when the DXY does this to this, area of interest we're anticipating that it's going to get to before it pushes to the upside, right, it then gives the GBP USD momentum to what go up. And just like that, it may be confusing right now, but it is very important that you go and backtest. For me to be able to understand what I'm telling you right now, I have to backtest. I have to lose a lot. It's something I have to spend time. Imagine taking losses for like 6 months just trying to understand why this is happening in the market. Why does the DXY move, inversely to the GPSD and Euro USD? How do I trade the pullback on the DXY and make sure that I am trading in the direction of the monthly time frame on the GBP or the Euro USD? This is how we do it. There is no magic trick. There is no indicator. There is no, quant analysis or nothing. Simple price action, simple market structure. And that's how we do it. Nothing more, nothing less. So anyway, this is what we're expecting for the week. On GBP we have to wait for a couple of days, right? We have to wait for a couple of days for the Euro US, for GBP to, get into this area of interest. Like, so sorry, 1.30000. That's what I'm saying to you. Price, these are run psychologicals, they're not randoms. Run psychological, they're not what random areas of interest. Run psychological. So we need to anticipate, or rather wait for a pullback into this area of interest, and then I would wait to see a turnaround candle. Meaning when the daily time frame gets here, because the pullback is happening on the daily time frame, so I watch only the daily time frame, and then go to the 4-hour time frame and the 1-hour time frame for my entries. But when the pullback is happening, or rather when the pullback finishes happening, right, and then it touches 1.33000, right, I would wait for one thing. I would wait for a candlestick like so. I would wait for a small body candlestick. Trust me, I have executed when it touches the area of averages. I execute. Trust me, you don't want to be that guy. You want to wait. The game is patience. The game is not even about money. The game is about patience. Just wait. Right. So when the market gets here, I would wait for a candlestick like so. It takes a day. Yes, trust me, it will profit you in the long run. Trade everything reveals itself over time. Just also like trading, you cannot tell me you're going to be profitable in a year. Is it possible? Yes, but you will learn nothing. You know why? Because if you want to be profitable in a year or two, you're going to have to take your mentor's word, verbatim, right? If your mentor tells you, oh, don't do this, do that, you do this, and you do exactly what he has said, but you haven't taken the loss and you haven't experienced the feeling of why you shouldn't do that. That is the route I took, or rather I am taking. So I'm not talking from I'm not reiterating what my mentor has said. I'm telling you from experience, from journaling, from failures, from lessons. So have a great week. Follow your trading plan. Journal your trading plan. It's very important. Premeditated plan is the best. You wake up in the morning and then you wake up in the morning and you fire up your laptop, and then you want to trade and you want to execute in the market. Trust me, recipe for disaster. So plan your trades. I journal I plan my trades on the weekend. So by Monday morning, it is fixed. It is set what I need to do. Whatever I see in the markets, my emotions are not triggered because I have a plan. So follow your trading plan. Have a great week. Bye bye.